All right, let's dive into, of course, the markets today. Take a little bit of a deep dive on some of the things that are happening around Ethereum and Bitcoin. I think you guys are going to like it. We have a special guest. My name is Paul Barron. Welcome back in the Tech Path. Joining me today is Mr. Mark Yusko, coming over from Morgan Creek Capital. Great to have you back.
Hey, always great to be with you, Paul. Happy Wednesday.
Yeah, I see your conference schedule is pretty heated right now. Busy. You got a lot cooking, so congrats to everything that you're doing out there. I want to jump in first up on the Ethereum FUD that seems to be coming in. I've got a few tweets here, one from Watch Your Guru, just in the ETH Foundation under investigation by state authority. This is coming over from CoinDesk. And then you also have this tweet right there, SEC pursuing legal campaign to classify Ethereum as a security. Before we get to another tweet, I want to get your opinion on what's going on here. Do we have something with the SEC and the Ethereum Foundation, or is this simply FUD? What's your opinion?
Definitely FUD, definitely fear, uncertainty, and doubt. That is how the incumbents deal with technological innovation, right? So blockchains are the future of computing, full stop. And they're not, the technology is not going away. And I've been shilling this book, that Chris Dixon wrote, Read, Write, Own, for anybody who wants to understand why, this thing that I've been talking about for almost 10 years, about the cycle of technology, from the mainframe to the microchip, to the personal computer, to the internet, to the mobile net, and now the truth net, which is the internet of blockchains. And why AI is not it, right? AI is a tool that's been around 75 years. It ran on big computers, then it ran on personal computers, then it ran on the internet, and then it ran on the mobile net, and now eventually it'll run on blockchains. I will say it's a 75-year overnight success story. But the FUD, the fear, uncertainty, and doubt, is spread every single time there's an innovation in technology that threatens incumbents' livelihood. So you can go back to the internet, right? AT&T and Verizon tried to kill, literally, the internet because they didn't like what you and I are doing right now. Voice over internet protocol is free. They charge $3 a minute for long distance. We're far away from each other. And they liked charging $3 a minute for that. So they tried to get a bill passed, and they spread all these rumors about how the internet was bad. And thankfully, I would say, Al Gore did not invent the internet, but he did kill that bill, which stopped them from over-regulating it. And the same thing's true now. The banks are being disrupted by these chains. And financial services, as we know it, which has had a good 838-year run under its current form, based on trust, is being displaced by truth. Blockchains give you truth. And therefore, as we think about, how would you stop these chains, these innovations from happening? Well, we'll over-regulate them. Well, but you don't have any jurisdiction because they're not securities. Well, then we'll classify them as securities. Or we'll try to classify them as commodities and get some other regulator to, collaborate, to work with us. Well, they tried that with Bitcoin. They tried to over-regulate. They tried to regulate by attack on, new technology and new innovation. And what happened? The courts said, Gary, you've overstepped your bounds. And now we have Bitcoin ETFs, and they're part of the culture of the future of financial services.
For sure.
So now next up is Ethereum. Well, Bitcoin is better money, right? It's a blockchain application for digital gold, or as Michael Saylor says, digital property. That is the future of money. Okay, great. Ethereum's different. Ethereum is the future of global compute. And you've heard, Sam Altman and others say that compute is the most valuable asset in the future. And that's true. And eventually it will be invisible, right? Like, I can't explain to you, Paul, how I can talk into this metal and glass box on my desk and you can hear me and see me in real time in HD. I would say a guy with a face for radio would like it if it wasn't so HD. But I can't explain how that works, but I don't need to, because it does. It's invisible. And I can't explain to you exactly how a hash is created for cryptography to work, but I don't need to. I just need it to work. And I need to know that once we have truth on chain, and that's different than online, right, and different than offline, right? Yeah. When you and I used to trade things, we would have to be physically proximate to each other, and we would exchange goods or services. Okay. Then online came along and you could send me an email instead of a handwritten snail mail letter, and we could exchange goods or services electronically. We didn't have to be physically proximate to each other anymore. And online disrupted the old offline world. Well, now on chain is going to disrupt how we exchange value as opposed to goods and services, because anything of value can now be digitized, can now be created as a unique asset on a blockchain. That's the mind-blowing part, right? I can take any asset in the world, create a unique asset that cannot be duplicated, cannot be double spent, cannot be challenged for who has title. It is digital property rights. And Ethereum is a global distributed network that allows certain types of transactions, as does Solana and others. And we'll talk more about the differences there. So that's a long-winded way of saying it's FUD, it's expected, and the reality is the courts forced the SEC and Chairman Gensler to approve the Bitcoin ETF.
Yeah.
There has been no such court ruling, no such lawsuit to force his hand on Ethereum.
Right.
Therefore, he can do all of this, FUD campaign to make people afraid that it's not going to happen. And as we all know, people will buy the rumor, whatever that rumor is, whether it's new technology adoption, whether it's new chips, whether it's new products, and then some of them will sell the news. And so you'll get this run up in price. And then if it doesn't happen, or it does happen, they'll sell out of fear. If it doesn't happen, they'll sell out of, I'm going to take my profits if it does. And we saw that after the Bitcoin ETFs, and then they went back up. And now there's been some, downside pressure. Ethereum ran along with it, got all the way up over $5,000 and, or $4,000, sorry. And now, bam, back down again.
Well, I think the key here, as we see, disruptive technologies that you're alluding to really kind of start to take hold around the whole process of the financial system. And I think the difference point, and I've talked about this before, is this is now money. This is no longer, the disruptive technologies of the internet, even though that really disrupted communication, which is another big issue that we're now facing, including all governments around the world, around freedom of speech. This was a good tweet here from Scott Melker over there at Wolf of Wall Street. Shout out to Scott. BlackRock is launching their tokenized asset fund on Ethereum. At the same time, they seeded with $100 million. They're launching this on Ethereum. You would think that Larry might have Gensler on the phone and say, listen here, what do we got going on here with investigations that are frivolous against what we're doing here to change
BlackRock is going to do what BlackRock is going to do.
Yeah.
They are the largest asset manager in the world. I told people for a year that there was no question in my mind. As soon as they announced they were going after the Bitcoin ETF, not only was it going to get approved, they were going to be first. Right. Now, they decided to crown them all at the same time. But and
They're the leader.
look, Bitcoin has, BlackRock has applied for an ETF in Ethereum as well. I think the challenge now is who has the bigger, stick, shall we say, and everything is political. Appointments of these, unelected people are by the current administration that happens to appoint them. It happens to be an election year. So, look, Ms. Warren is pretty anti all of this. Why? Well, my thesis, I won't put words in her mouth, but my thesis is you look at her largest campaign contributors, they happen to be large financial institutions that have a great deal at stake if they are disrupted. So it's not surprising to me that she would craft legislation to slow down the disruptive technology. Okay, the fact that it's an election year and that she's, look, show me who said it, show me the incentive, I'll show you the outcome.
There you go.
That is the way the world has always worked. And here's the problem, political problem, as I see it. It costs, from what I've read and studied, about $100 million to secure a Senate seat in the United States. $100 million. Most of us don't have that. So if we want to run, unless your name is Meg Whitman, who spent $103 million or $108 million, I can't remember, of her own money.
Yeah.
She lost, unfortunately, but she spent over $100 million of her own money. Unless you're her or someone like her, you have to raise $100 million. Well, it turns out if people write you $1, $10, $20, $50 million checks, Paul, they expect something.
Yep.
And that's the way our system works in a world where you allow unlimited contributions to, PACs and super PACs. So either fix campaign finance and make people so they're not on the payroll of special interests, or do term limits like the old days, right? And when the founders or the framers set it up, 2 years, you left the farm, you went, you served, and then you went back. You didn't stay for 6 or 8 or 10 or 50. You stayed for 2. And maybe 2's too short. Maybe we need 4 or 6. I don't know what the right number is. But it didn't 20, it didn't 40, and it didn't 50.
Yeah, lifetime.
And there's also, it's also vitality, right? When are you the most vital? When are you the most, I hate to say it, but I watched some speeches of our current president when he was 35. I'm like, yeah, right on. I agree with you. I don't say that now.
Yeah, it's a different guy. It's a different guy for sure. All right, so to wrap up the ETH segment here, would you give the ETH ETF a fighting chance going into, maybe it doesn't happen in May, but definitely this year or next? Yeah. What's your thought on that?
Look, it will happen when the powers that be deem it appropriate. And if BlackRock really, really wants it to happen, it'll happen.
Yeah, maybe
because I think they have a bigger stick. I think they do have a bigger stick than the current chairman. Let's say, I think it's highly unlikely before the election, because the current guy was appointed by the current administration.
Right.
And so he's going to do what he has to do to stay. Now, if the administration were to change in November, how quickly would they replace, the SEC chairman? Probably pretty quickly. How quickly would that person, do I think the ETH ETF is high on the agenda? No, I don't think it's the bottom, but I don't think it's the first thing they would do.
Yeah, well, it's interesting to see, I think, the evolution of our financial and the monetary system. When you look at BlackRock's success that they've had in just a very short period of time, and I won't say BlackRock only, it's really the 9. You've got to look at Fidelity as well, even to a certain extent, ARK. This is a major move. Yeah, for sure. This was a statement by Dan Tapiero. ETF adoption set to keep driving Bitcoin's price. This coming in also with the scenario as if kind of the Coinbase effect, which is adding more people. Some people thought Coinbase might get affected, but in reality, it's probably opened up the coffers for them for new accounts. Plus, of course, the custody side of this. When you look at the ETF inflows, even though we had some different inflows at the early start of this week, Bitcoin now starting to correct around 64K. First of all, do you feel like this ETF inflow can continue at the pace in which it's happening right now, or do you think it's going to accelerate?
Yes and yes. So I definitely think it can continue. I mean, I think we've seen 12-ish billion of net inflow over the 8 weeks or so. I think that absolutely can and will continue. Do I think it is likely to accelerate, not decelerate? Yeah. And the reason is we still don't have all of the wirehouses and independents with full approval of the ETFs for their advisors. We still don't have all the education resources. There's going to be volatility, right? I think the volatility that we're experiencing now, talked about this, right after Chinese New Year, every year after a big year. So 3 out of 4 years in the cycle. So not on the down years, but on the 3 up years, you get 2 drawdowns in the first half of the year. One around Lunar New Year, because people in China need to cash out to fill up their red envelopes with cash, with renminbi. And that happens like clockwork, and it's a big place. Second is around tax time for the US. So kind of, Ides of March through the first week of April, as people realize, oh, geez, I got to pay taxes on all that crypto that I traded last year because it was up, 155%. And there's natural selling. And so that in the short run swamps the inflows. You got the added challenge that GBTC made a decision, which I don't fault them for in terms of being money grabbers. You got a captive audience, most of which came in at 6, 8, 10 grand Bitcoin. So they have huge capital gains. If they sell, they're going to incur big taxes. So it was highly unlikely they were going to sell right away just to save 100 basis points. But if it was in a not-for-profit account, an IRA, a retirement account, those were going to get sold. And that was bang, 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 the first few weeks of withdrawals. Now there's some arbitrage going on out there that people don't pay attention to. Interesting thing is financialization of this market is good in so many ways, right? I said all along, if the only purpose of Bitcoin is to put it on your ledger and bury it in your backyard, we can all go back to our day jobs because we have that. Sure. That's called gold. And it's been good for 5,000 years. But what people don't think about is that gold isn't just the few bars or coins that you stuff in your safe at your house as running money. It is the base layer of money. Every central bank in the world owns it. They issue currency on top of it. Mm-hmm. And the same thing about Bitcoin. If Bitcoin wants to be digital gold, digital property, right, eventually take on real estate as the great store of value, then it needs to be deposited. It needs to be lent out. It needs to be borrowed against. It needs to be financialized, meaning people can borrow against it. They can decide if they want to rehypothecate it or not. We need rules and regulations like the banking industry has. So the future of finance should look like the past of finance, and violators like Bear Stearns and Lehman and others should go bust, and we shouldn't bail them out, by the way. But so ultimately, we are on the right path and the right trajectory, but it's never a straight line with no bumps or hiccups. You know this because you've been on the street a long time. If you want to acquire a large amount of an asset, the oldest trick in the book is you don't just start buying it. You actually go short some. Mm-hmm.
Yep.
In fact, you spread a rumor saying you hate that asset and you push the price down so you can buy it at a cheaper price.
Yeah.
And whether it's George Soros or Julian Robertson or Paul Tudor Jones or Goldman Sachs, that's been done for centuries.
Sure.
And so this idea that somehow, as soon as the ETFs were approved, we're going to be up only, and there was going to be none of, because look, if $1 billion comes into the ETFs today, and I don't know if that'll be the right number or the wrong number, but let's call it 500 million. 500 million comes in, and a bunch of it goes to IBIT, the BlackRock. They, at $359 today, will, they'll set the price for their ETF, and then they have to go acquire X Bitcoin, however that is. The problem is only 900 Bitcoin get created today. If they got to go buy 1,000 Bitcoin, that's more than 900. So they got to go convince someone to buy it.
Yeah, got to go to the market.
Or sell it.
So Mark, when you look at, outside Bitcoin, we've talked about Ethereum, Bitcoin. I think everybody within our audience, to a certain point, maybe you're new to the show. If you are, make sure and hit subscribe right now. These are some of the kind of conversations we have that dive into not only crypto, but really kind of the future of finance. But I want to talk about when you look at Solana. Now, we did a show here recently. There's been a lot of speculation that Solana's movement here, cracking 200, continuing to accelerate in terms of dApps, the potential of taking some of the thunder from ETH. My question is, when you look at Solana and even Base to a certain extent, which one do you feel could be the retail chain? And I'm thinking transactions here, because at some point we're going to have to deal with scale, transactions, speed. All of those things have to happen out there for retail, whether it's next year or the next 5 years. Is there one that you're leaning in on right now?
So yes and no. I mean, when you talk about exactly as you described, all a blockchain is an organization of information, of data, right? Data is the new oil, and there's lots of data created, and a blockchain, the Bitcoin blockchain in particular, is a record of transactions that occur between owners of Bitcoin, the token, on the Bitcoin blockchain. So, okay, and people say, oh, but it's so slow. It can't scale. It's not fast enough. Well, in tech, you can be fast or secure, never both. So the faster you are, the less secure you are, and the more vulnerable to hack you are, and the more vulnerable to breakage you are. Right. And the slower you are, the more secure you are. So you think about Visa, super fast.
Fast, very vulnerable.
Very vulnerable. Ever had to get a new Visa number because someone stole your card?
Constantly.
Yes. So think about Solana, super fast, but it breaks down. In fact, this past weekend, I heard reports that 80% of transactions were failing. That's a nightmare.
Yeah, there was
That's a total nightmare.
Quite a bit of transactions. The growth of their meme tokens within the SPL tokens kind of exploded over the last week. Yeah. So that's a part of it.
But the flip side of that is, well, that just means more and more people are going there, and that's good long term because break some things, then fix them, then break some things, then fix them. I got that. Yeah. And here's an interesting question. Ethereum changed some things about the way it operates different than Bitcoin. And the Bitcoin maxis say that's all wrong, right? Proof of stake, that's bad. That could be corrupted. You need proof of work. To be money, 100% agree. Bitcoin is digital gold, digital money, an asset that exists in the absence of a liability. Ethereum's not that. Solana's not that. Nothing else. Bitcoin is money. Okay, but is that the only use case of blockchains? No, not by a long shot. Are there other things, to your point, on layers? I don't use money ever. I don't transact in gold. That's money. Gold is money, an asset that exists in the absence of a liability. What do I use? I use a little plastic card to exchange for goods and services. Once a month, Paul, I settle from layer 4, the Visa, network, the database. It's literally a database in a COBOL system, believe it or not, on a mainframe. Okay. Once a month, I settle using ACH to FedWire my bank account. I don't ever go down to the Fed, gold at Fort Knox and get a couple coins and give them to somebody. I don't do that. Same thing's true here. Everything of value that is really valuable ultimately going to settle on the most secure chain that is secured by proof of work? Yeah, I could make that case. But we don't have a great L2. We have Lightning, which is okay, but it's not robust. It doesn't scale enough. We don't have L3. We don't even have L4. Is that going to get developed? Maybe. But what about this proof of stake thing or proof of history thing? Well, those are ways to speed up transaction processing. Okay, but what's the downside? Transactions can fail, things can break, they can get lost, they can get hacked. I talk about this all the time. The Chainlink guys hate when I talk about it, but I can envision a world where there's a bunch of L1s.
Yeah.
Right? You got Bitcoin, you got Ethereum, and the retail chain isn't any one chain. It's, I want to trade whatever I want, whenever I want, and I'm going to need to use these bridges, right? It's like that scene in Back to the Future. Like, I've seen the future, and that's where we're going. So
yeah, I always love to chat with you because you give some perspective to understanding really the cycle of how technology and innovation kind of goes forward. Mark, it's always great chatting with you. We appreciate the time today. Definitely, we're going to get you back on as things continue to progress on the ETFs, which we think are going to be quite something going into the election. So we'd love to have you back soon.
Always. It's always great to talk to you. I appreciate the questions and the insight, and appreciate the community you've built, and glad to be part of it.
You bet. Thanks a lot, Mark. All right, so you guys are tuned in maybe on the podcast side of things right now. Make sure and get over here to the YouTube channel and dive in, because we do a lot of these kinds of interviews and more, along with Web3 analysis, all sorts of token projects, and we do a lot of analytics as well and dive into that. So this is where you want to be. Make sure and subscribe to the channel right now. If you haven't already done so, like a few videos. It always helps the channel, and also will help you in starting to get this kind of stuff into your algorithm, starting to help you learn what's happening out there in the blockchain. If you guys want to catch me on X, it's @PaulBaron. We'll catch you next time right here on TechPath.